All right, so we're diving deep into investing charts today, and I'm really excited to have you here.
Absolutely.
Charts can seem intimidating, all those lines and bars and numbers, right?
Yeah, for sure.
But once you understand the basics, they actually become incredibly powerful tools. I mean,
Absolutely.
they can help us see patterns, trends, and opportunities that might be totally missed otherwise.
Definitely.
So for anybody out there, whether you're prepping for a big investment meeting or just starting to explore the world of trading, this deep dive is going to give you the essential knowledge you need to start deciphering these charts like a pro. And we've got some awesome material on different charting techniques to really get us going.
I think one of the best places to start is actually with the most basic chart type, the line chart.
Okay, yeah, line
Okay,
charts.
sometimes simplicity is key, right?
Keep it simple.
And the line chart just connects the closing prices of an asset over a period of time.
Makes sense, yeah?
So it gives you a really quick snapshot of the overall trend, whether it's been going up, down, or just kind of staying flat.
So this is a great way to get a sort of bird's eye view of the long-term performance.
Absolutely. If you're looking at a stock's performance over the past 5 years, for instance, a line chart can immediately tell you whether it's been in a bull market, an upward trend, or a bear market, a downward trend.
Gotcha. So it's perfect for spotting those big long-term trends. But what if I want to zoom in a little, get a bit more detail about what happened within each day or week of trading?
Then we step up the complexity a bit and we go to a bar chart.
Bar charts.
A bar chart shows you the price range for each period.
Oh,
So
nice.
you see the highs, the low, the opening price, and the closing price.
Gotcha. And that's all represented in a single bar.
Exactly. So if the bar is long, it means the price swung up and down quite a bit during that period. If it's short, well, trading was relatively calm.
I see. And some bar charts also use color, right?
Yeah, you often see red bars for periods where the price closed lower than it opened and green bars for periods where it closed higher.
Makes sense.
So you can quickly scan the chart and get a feel for whether the price was generally heading up or down.
Right, right. Now, speaking of colors and shapes, that brings us to the candlestick chart, which I know you're really into.
Absolutely. Candlestick charts are really fascinating.
Yeah?
They've been used by traders for centuries, actually.
Wow, centuries.
Going back to Japan, they were using these to track rice prices. They add this visual element that can really help you see patterns more clearly.
Yeah, well, they've got this really unique shape, right?
Yeah, each candlestick has this, well, candlestick-like body,
Right.
and that body can be either filled or hollow, and that tells you at a glance whether the price closed higher or lower than it opened.
So filled body means the price went up.
Exactly, that's a bullish candle. And a hollow body means the price went down, a bearish candle.
Gotcha. So we can tell at a glance whether the buyers or the sellers were in control that day.
Precisely. And then you've got the wicks, or the shadows, as they're sometimes called.
Okay, the wicks, I see.
These are the thin lines extending above and below the body, and they show you the full price range, the high and the low, even if the opening and closing prices were very close together.
Okay, so even if the candlestick body is tiny, because maybe the opening and closing prices were pretty similar, the wicks could still be long, showing that there was actually a lot of price movement within that day.
Absolutely. So you might have a short green candlestick with a long upper wick. That could indicate that buyers initially pushed the price higher,
Yeah.
but then sellers came in and drove it back down close to its opening price.
So there's all this hidden information packed into those wicks.
Exactly. It's like reading between the lines of the chart.
It really is, huh?
Yeah. And that's why candlestick charts are so popular, especially among day traders who are making decisions on short time frames.
Now, we've got all these different kinds of charts. I mean, we've got line charts, bar charts, candlestick charts. What about area charts?
Area charts, they're more about the visual appeal.
Right.
They show you the price trend, just like a line chart,
Okay.
but they fill in the area beneath the line.
So it's like a filled-in line chart.
Exactly.
Yeah,
That can make it easier to see the magnitude of price changes over time.
I see.
And they're especially useful when you're comparing the performance of multiple assets on the same chart,
Okay.
because the areas can overlap and you can visually see which asset has been outperforming.
So it's a more visual way to compare different environments.
Exactly. But they don't give you as much detailed price information as a bar chart or a candlestick chart.
Gotcha. So it's really about the visual comparison.
Yeah, they're more for a quick visual impression.
Now, let's talk about moving averages, because I know that this is a tool that a lot of investors use.
Yeah. Moving averages are really powerful. They help smooth out those daily price fluctuations.
Right. Get rid of the noise.
Exactly, and see the underlying trend more clearly. So if you're looking at a 50-day moving average, for instance, that's telling you the average closing price over the past 50 days.
Got it.
And if the current price is above that moving average, it suggests that the momentum is upward.
And conversely, if it's below, the momentum is downward.
Precisely. Now, there are different types of moving averages.
Right.
The most common are simple moving averages, or SMA.
Okay. Simple moving average, SMA.
And then you have exponential moving averages, or EMAs.
EMA. Okay.
An SMA gives equal weight to all the prices in the calculation,
Oh.
while an EMA gives more weight to the most recent prices.
So it's kind of like putting more emphasis on what's been happening lately.
Exactly. And that can make EMAs a bit more sensitive to current price changes.
I see. So if I'm trying to catch a shift in momentum early on, an EMA might be a better tool.
Absolutely. You'll often see traders using multiple moving averages on their charts, maybe a shorter term one like a 20-day EMA and a longer term one like a 200-day SMA. And they look for those crossovers where the shorter term average moves above or below the longer term average,
Interesting.
which can signal a potential change in trend.
So it's all about looking for those signals, those clues.
Absolutely. It's like putting together pieces of a puzzle.
Now, no matter what chart you're looking at, there's one more element that's crucial to pay attention to, and that's volume.
Yeah, volume's key.
Yeah.
I mean, we could have the most beautiful candlestick pattern in the world, but if the volume is low, it might not mean much.
So it's like seeing a few people clapping politely after a performance versus a whole crowd giving a standing ovation.
That's a great analogy. High volume during a price move can be a sign of strong conviction behind the trend,
Makes sense.
while low volume might suggest that the move is less reliable.
So it's really about looking at price and volume together.
Well, precisely. They work hand in hand.
Now, finally, before we wrap up, I wanted to touch on technical indicators. These are those calculations based on price and volume that some traders use to try to predict future price movements.
Yeah, there's a whole world of technical indicators out there.
It really is.
Things like moving average convergence, divergence, MCD, or the relative strength index, RSI.
Yeah, RSI, I've heard of that one.
Each indicator has its own formula and interpretation. But the key is to remember that they're just tools.
Yeah.
They can offer hints and potential signals,
Right.
but they shouldn't be the sole basis for your decisions.
So it's kind of like using a GPS system. It can guide you,
Yeah,
but you still need to pay attention to the road and make your own judgment.
exactly. You don't want to blindly follow an indicator into a ditch.
Uh-huh. Yeah.
The best investment decisions come from combining your analysis of the charts with your own research and judgment.
Yeah, understanding the underlying companies, the market conditions, and your own risk tolerance.
Absolutely. It's
Yeah.
all about putting all the pieces together.
Well, this has been an amazing deep dive. I feel like I've learned so much about these different charting techniques and really how to start using them to analyze the market.
Absolutely. And the key now is to put this knowledge into practice.
Yes.
Get your hands on some charting software, start experimenting,
Absolutely.
look at real-world examples.
Yeah, and the more you practice, the more comfortable and confident you'll become.
Absolutely.
So to our listener out there, keep exploring those charts, keep asking questions, and never stop learning. Thanks for joining us.
Absolutely. Thanks for having me.